Welcome. How are you doing today? This wonderful December 4th at 1 p.m. I'm Lee Johnson, co founder of Value Investment Partners. And who are you, Miss Beautiful Lady on the other side?
This is Eunice Johnson, co-founder of Value Investment Partners, and good to be here. Can you hear me well? Am I loud enough? Can you hear me? I'm good. All right.
Loud and
We
clear.
don't want to go
Loud.
live and find out that we're on mute. So just let you show.
Are you picking at me?
No, we just want to be sure. We don't want to delete all this good information after we share it.
All right. So, welcome. We are Eunice and Lee Johnson here with Value Investment Partners, or better known as VIP. Right. And at VIP, we've come to offer a number of different services to our partners. Those services are around coaching, those services are around building out your business credit. One of the things that we love to talk about is the fact that we believe that building wealth starts with owning your own home, right? You have to live somewhere, and one way where it can actually be consistent is when you own your own home, right? And then in 5 or 10 years, you actually realize that, whoa, my rent, my mortgage hasn't increased, but now I have something inside of the bank, well, inside of my home called equity. And
Yeah.
the reason why I bring that to everyone's attention is a couple of weeks back, maybe about 2 or 3 weeks back. When was the closing, Eunice?
Yeah, about that time. In
About
20.
2 or 3 weeks.
Mm-hmm.
You helped a couple to secure their first home, and walking away from the title company, they were really excited. But one of the things that I wanna give you grace about is the fact that over the years you have helped many different first time home buyers go through the process. And if you were to talk about what are some of the things that you advise first time home buyers when they're looking at or getting ready to go through the process? What's the advice that you give them?
Mm. Well, I think a lot of times I meet a lot of people who say, well, I don't know if I'm ready to buy a house. I don't know if I have 20% down to be able to buy a house. So the first thing that I usually just tell people is if you know you are going to be in a certain location for at least 5 years, then instead of potentially renting, you can look into buying a home. Of course, if you are going to be somewhere for just a year or two, it really just may not make sense for you to buy a home. But if you know you're going to be there, that's where you're stationed, that's where your family is, or your kids, or your job, and you're going to be there for a longer period of time, think about and look into buying a home. And the first thing that you really want to do is you want to connect with a realtor who is going to work with you, sometimes even a year or two out before you actually purchase, so that you start preparing yourself for the process. And that preparation includes being linked with a lender who will help you determine what your buying power is, as well as to help you if you need some guidance with either maybe working on your credit so that you can get a better rate, or what you may be needing to work towards saving towards that down payment, depending on the type of mortgage that you're getting. Let's say you're looking to get in at about 3% or 5% of the value of the home. They can work with you to make sure that you are able to save all that type of money that you're going to need upfront. So it's not really just about, okay, I've got 50,000 already saved. I'm ready to go. So you want to prepare and start very earlier on when you're just thinking about it and saying, hey, this is something that's coming to my mind. I want to try and see if I can get into this. That's a great time to talk to a realtor, have a relationship with a realtor, make sure that you understand what your needs are versus what your wants are, so that when you're ready to now go out there and start the purchasing process, you familiarize yourself with the whole other things that you would come in handy when it's now time to really buy.
You said a lot there. The one playback that I would have is knowing what you can afford, right? There's a
Hmm.
difference between knowing what you're qualified for, right? Let's just
Yeah.
say in the Northern Virginia area where we are, let's just say that you are approved for 500,000. Is it
Hmm.
your recommendation that they don't actually use up that whole entire 500,000?
There is a lot of things that will come into play with that. Of course, your lender is going to look at your debts to see how much can you really afford, right? And that number, that 500,000, will be based on a whole lot of things that your lender is going to look at, both your assets, your liabilities, and things of that nature. However, I always tell people that at the end of the day, you are the person, or you are the one who makes payments. So if a lender says to you, hey, you qualify for 500,000, then the next question that you may want to find out is, okay, if I purchase a home for 500,000 and I've put in 5%, how much is at a ball, what's a ballpoint number? How much on a monthly basis will my mortgage be? If it comes out that, let's say hypothetically, your mortgage is going to be 3,500, then you need to make that decision. Would I be able to pay 3,500 per month for my home and then also have sufficient enough to save, have sufficient to cover utilities, have sufficient to be able to buy food and other necessities, have sufficient to be able to do other things that I may want to do, whether it's, monthly going to get your nails done, or, paying for kids after school activities. You ultimately make a determination of how much can I really realistically afford, such that I'm not now pressed so much that if there was an emergency, I wouldn't have anything saved, because all the money that I have goes towards paying for all these things, and there's no allowance for you excuse me, there's no allowance for you to even have savings or some type of emergency funds or anything like that, because all your funds are going towards all these things. So you determine how much you can really qualify for based off of that number that you've been given. There's nothing wrong with coming back to me and saying, or to the lender and saying, okay, I get that I have 500, but I'm more comfortable to go in at about 450. It's up to you. And it's
No, you
important
don't.
that you make that decision.
One of the things that you want to do is you don't want to be house rich and cash poor, right? And
Exactly.
you also,
Yeah.
one of the things that we always talk about is having that emergency fund cushion. And
Hmm.
that emergency fund cushion is going to be dependent upon the individual and what is their level of risk tolerance at the same time, right?
Hmm.
What is the level of risk? But once that home is actually purchased, there is a certain level of risk that the family is exposed to, right? And one of
Mm.
the ways that you can secure your family against that risk is through the purchase of some kind of insurance, right? We
Mm.
like to have a conversation about using insurance because of the cash value component and how that can actually be used when you are alive, right?
Yes.
But
And mhm. And
but
like you
go
said,
ahead.
there is, I don't know anything that is of value that does not have risk. So there'll always be risk in the things that are the most valuable. So yes, you purchasing that home, there'll always be that risk. Now, what's important is what do you do with that risk? Do you just say, "Oh well, if I pass, then they can sell the house and the bank will get its money." Because then you counter that and say, then what happens to your family, or are you okay with them having to either downgrade or not have anywhere to go? There's a lot that we can unpack. However, one of the ways that we know that you can limit the exposure or the risk is for you to have some type of insurance. Now, there are different types of insurance for different types of needs. There isn't a one size pot that fits everything. So, you want to also explore that option to say, okay, how best can I limit this exposure that I have? For us personally, what we usually tell our clients is we value whole life insurance policies. Not just any whole life insurance policy, but a customized whole life insurance policy. The reason why I want for people to understand there's a distinction is that you can set it up just the traditional way, where it's just going to serve as a insurance policy that you cannot particularly um, structure such that you are gaining more of a cash component of it versus the death. So you want it to be customized to your needs. What you can do then is you look into getting a policy that you can have in place so that when you die, because we're all going to die, it's just a matter of when. So you want to make
Yeah.
sure that when you die, this policy, if anything, would be in a position where those funds can come to your family and your family may be able to pay off the home and have some type of funds also left for the family as they're navigating your loss to at least, if anything, give them sufficient time to grieve before they make decisions of, okay, where do we go from here? Do we move out? Do we sell this house? What do we do? You want to have that extra cash that's going to be coming in to help your family. And there are several ways that you can do that.
Well, you mentioned a couple of different things, and a quick double click into one or two of those as you mentioned a customized policy, right?
Yeah.
I know just because of personal experience that when we created the policy for our family, right? Because the family is an economy, right?
Yeah.
When we created our policy, we read the books, right? We did our homework, we dotted our I's and we crossed our T's. However, the policy that we first obtained wasn't well designed for the purpose that we were establishing, right? So, can you go into more of that? What is what are some of the components to a well-designed policy?
Mm. Well, before I get into that, you touched something that is very close to my heart because you talked about how your family is like your economy. And one of the profound things that I've learned from just a couple of networking groups that I'm a member of is that A lot of times we navigate the world as consumers. However, when it comes to your family, you want to look at your family as a business, as a financial business. As a financial business because every month or however often you get some funds coming into the family, whether it's through a W 2, whether it's through dividends, but you get funds coming into the home or into the family. And as
Mhm.
business owners or as entrepreneurs, we all know and understand that for our businesses to flourish, there is what almost every entrepreneur out there will tell you, that cash flow is king. The same thing works even in a family setting. When you treat your family as a financial business and you treat it such that you know that, hey, it is important for this well being of this family to have that cash flow coming in. And one of the ways that you can also have another access to cash flow coming in is through an insurance policy. All right. Now, answering what you were asking me also, you were talking about some of the things that one may want to look at when they're creating these policies, right? It's very important that when you have a policy designed for you yourself, one, that you sit down and we understand what your needs are. Everybody has different needs, everybody has um, different backgrounds. So it's very important for us to understand exactly where you are, and then we can map out a policy that's going to align with what you're looking for. What I mean by this in a short trying to explain it in a very short term is that for some people they may be looking for access to cash of, let's say, maybe 10 to 20,000. Another person may be looking for access to cash maybe in the 50,000 range or even higher. So because of all these differences, the way that your policy is going to be structured, it's going to be structured such that we try and meet that need as much as we can. There will be two components to your policy. There'll be the death benefit as well as that living benefit or the cash component part of it. Some people will
Mhm.
say, hey, right now, I'm not pressed so much for the cash component. I just want to make sure that I have a certain amount of death benefit. Another person may say, I want to strike a good balance between both the death benefit and the cash component. A third person may say, I'm more interested in the cash benefit. I want to make sure that I can utilize a lot of this cash, keep reusing this cash to get to where I want to get. So then once we understand where you are and what you're looking to get or where you're going, then we structure this policy such that we balance out your premiums to make sure that they are sufficiently financing or that sufficiently paying for that component that you're really looking for, be it debt, be it cash. I hope that's easy enough to understand.
No, it's understandable to me. And if anyone has any questions about, the information that has just been communicated, on YouTube as well as Facebook, we're able to you can put it into the chat and we could have a conversation about
Mhm.
that just the same. But one of the things that we talk about quite often is, using a home as the foundation for establishing your wealth growth strategy, right? But also as a business owner, as you have built your empire, right? You want to protect your empire should you no longer be around, right? But that's going to secure your business, it's going to secure your family, but it's not seen as just a slush fund where you put money just in case you pass on. But one of the strengths that we find with this is the fact that that cash value is something that can be leveraged through a policy loan to fund your business, right? In times of low revenues, unexpected revenues, or that low season that businesses go through. As a real estate agent, you know that you're not always having a transaction that you're working on, right? So the
Mhm.
revenues or the income stream is not always consistent. So one of the things that we saw and one of the things that we wanted to use is one, Value Investment Partners is a business that needs to be able to stand on its own. That's the first thing, right? What we had to do was separate our business from our personal side, right? So now today, Value Investment Partners can stand all on its own, right? It has access to credit lines, it has access to universal credit, where you and I, although we have great credit scores, you and I don't have to provide a personal guarantee there, right? And it
Yeah.
took us some time to walk through that journey and learn those lessons. It took us a little bit of time. But also, now what we're saying is you have the business credit lines available to you, but there's another way that you can secure your position by also creating a cash value life insurance policy as well. And at those points in time, you could either tap into the cash value of the life insurance, or you could tap into the um, the lines of credit that you have.
Hmm. And I think what's interesting also, or what people may just want to know, is that even as a business or as a family, you always, you can never say, I have more than enough sources of where I could go and get cash if I need it, right? So it's easy to say, well, I can walk into a bank and get a loan if I ever needed funds, right? Yes,
Mhm.
definitely you can walk into a bank and get funding, right? You can, some people are fortunate enough, they have family who they can reach out to and get funding. However, what we are trying to do here with this community, we are trying to educate each other, share knowledge to say, hey, there are many other avenues available, and pick the ones that you believe would work for you. If you believe that, hey, as a business entity, being in a position where I'm able to have lines of credit is going to be beneficial for my business for growth, then that's the route that you want to take and have under your belt. If you believe that, hey, I believe that I also need another source of funds or cash, and this is another way where I'll have access to funds, but on top of that, when I die and there's nobody to take over my business, or the business will still continue, but of course there's going to be that key person who's no longer there. So, it may not function as it used to prior to your passing. Then there's another option. You can now also have a cash value life insurance that's going to both protect your business as well as protect your family and give you access to cash. That's another way. Some people will say, well, I do have a home and I can tap into my home equity. That's another way. The whole idea is, don't rely on just one, or say, well, I have enough funds personally, I should be able to do this and I'll be okay.
Well, one of the things that you mentioned is that you can tap into your home equity, but let's just say you are in a scenario where you are in between jobs.
Exactly.
right? One
Yeah.
of the things that you're going to probably have to provide as you're tapping into that home equity, if you don't already have the line established, is you're going to have to show proof of income,
Hmm.
right? And now you're in a scenario where you are in between roles, right? And you want to go and extend that line of credit, and they might ask you certain questions, and knowing that you don't have access to income anymore, they might just either revoke your line of credit, right? Or they might reduce it to the level where you were expecting to make a move and fund a new business, etc. But
Hmm.
now you have to have a change in plan.
Not only that, I think, like everything else, though, you have to really look at everything as a whole. One of the things that sometimes I hear people pushing, okay, you have this line of equity, you can tap into your home and grab and use those funds. Um, Also remember with that is if you then pull those funds out, before you even pull them out, then you need to establish when are you going to make the payment? When are you going to pay back that money? It has to be paid on a monthly basis, right? You have to establish the payment plan prior. Whereas when you have a loan from your insurance policy, you don't need that. If you
Hmm.
take pull that out today, you can decide, okay, I can pay this back in 6 months. There's no formal, okay, this is the plan that once you pull this money out, this is how much we're expecting you to pay on a monthly basis. Now, good practice, good financial sense is make sure you pay back on a regular schedule and you follow through. However, it's not the same as with a bank where if you were not able to pay 1 month, or you skipped 2 to 3 months, then there's a problem, right? So it's one of the things that you also want to look at as you are exploring all your options.
No, and life is much better when you have options and you don't have to make or take decisions that might be detrimental to you as a whole. That's what
Hmm.
you're trying to avoid for the most part. Well, we are coming down to the bottom of the hour. Eunice, is there any parting words that you have for our community as we close out today's session?
Well, I want to say, as business owners, we wear many hats. We do so much for our businesses, we do so much for our families, we do so much for our communities, right? So all these heads, all of them require that we really commit, we are consistent, and we constantly are evolving, right? What is critical is just to make sure that as you navigate the process of being a business owner, that you don't neglect any aspect, whether it's your family, whether it's the business, whether it's your community. You want to be well rounded, and this community here that we have, this is what we are looking to do. We are looking to make sure that we grow like-minded business owners and entrepreneurs, and we grow well rounded individuals who are able to grow because of the sharings that we have here. And part of those sharings will be centered and are always centered around making sure that you grow your business the right way, where it's separate from you personally, and there's a distinction between your personal finances and your business finances. We also want to make sure that you protect yourself and your family, and you limit the exposure from risks that are always around us. And part of doing that involves making sure that you have life insurance. It's not only life insurance for you yourself, you could also insure even your kids. As a matter of fact, with the holidays coming, sometimes, if you recall, Lee, for us, we are not big on buying kids gifts and things of that sort that they're going to play with for a few seconds and then leave off. One of the things that we do is we say, hey, if we are able during the year to spend this amount of money on the kids, why not divert that money into a policy for them? And we gift them the policy once they are of a certain age. That is one other way that you can pretty much protect your home, protect your family. And then lastly, about the community, we are always looking to be a part of the community that we live in and to give back. When you give back, you get more than enough to be able to continue giving back. So this is the community that we're building. This is the community that we want to interact with and grow with. And any last words from you?
No, one of the things that I wanted to extend to the community as we continue to grow, we want to have conversations with small business owners,
Yeah.
right? We want to have conversations with small business owners so that we can understand what is it that they're doing to fund and to grow their business, right? Because, we've had our journey. On our journey, we have made some mistakes, but our journey is our journey. And we want to have conversations with others about their journey. And we want to offer them a platform where they can come and have a conversation with us about things that they're doing to not only grow their business, but to take out the risk from their business at the same time. So up in the corner here, we have the QR code to the point where if you want to be a guest on, Business Insights, what we could do is bring you to our platform and you can promote your business and just have a friendly conversation about what it is that you're doing. So over here in the upper corner, you're going to see a QR code that's the VIP guest, and we'll also take that and put it into the show notes at the same time, because we would love for you to subscribe to our YouTube channel, to follow us on LinkedIn and Facebook and Instagram, right? We have a presence on Instagram too.
Yeah, we
So,
do.
we don't want to be too much long-winded. We want to be in and out, be seen, be heard, be quiet. Um, I think that that's the message that we wanted to bring to you this week. So I want to say to our community, thank you for joining us, and we'll see you again, same time, same place next Wednesday.
Thank